Welcome to Markets Now. I'm Michelle Rourke with Kent Beadle Paradigm Futures. The livestock futures are leaning mixed to lower this morning. We're higher over on the grain trade. And Kent, let's start off talking about the price leader, soybeans, finally above the 50-day moving average here. What's pushing this? Is this all about China and their prices, or the rumors of them buying?
Well, you've got a couple different rumors. We've been hearing some pretty steady amounts of purchases really over the last 2 or 3 weeks. It's been accelerating, and that normally happens at this time of the year. This is the sort of the gut slot period upon which Chinese purchases typically occur. We've also had some rumors this week about some Argentine purchases, some of which could be U.S., so that's helpful. And then, we did have China on holiday for a couple of days, and their markets opened up here on Wednesday, and they had a very strong session on Wednesday. And I think it was the strength in the Chinese market that really helped the U.S. soybean market get up and go here this morning.
No doubt. And you're also hearing of maybe some disappointing yields on the early beans in the East.
Yeah, so of course, social media is ripe with lots of different reports. We've been hearing a number of reports on some early beans in Indiana, and Indiana is a place that we've always thought would be a little more mixed, and especially as you get a little further south, they've been a little bit drier. But you're hearing a lot of as good as last year at best, and 10 to 20 bushels an acre lower than last year at worst. And I think those are the kinds of numbers that maybe surprise traders a little bit, because they weren't anticipating that. And of course, Indiana has had fairly high crop ratings all year.
No doubt. And are we watching South American weather? I know it's been hot and dry in Brazil, but it's kind of early as they start planting here.
It's early. However, they would like to be able to start planting, and they moved up their allowed planting date to September 1st. We're now more than halfway through the month, and there's really nothing that's occurred in Mato Grosso. We are seeing out in the 11 to 15-day time frame the possibility of some rain, but when I looked at the amounts this morning, I really didn't think they were very substantial, and I don't think with the soil moisture situation as it is, it's going to be enough to allow them to plant. So one of the things that has been supporting the market over these last couple weeks has been some of the reports out of Brazil that say that this is the worst drought in 40 years. There was one newspaper report said this is the worst drought since 1950. And while there's an awful lot of time for this situation to resolve itself, it certainly is not off to a great start.
No, and the algorithms tend to trade some of those headlines, it seems like. Yeah. So you mentioned that we're above the 50-day moving average here this morning. We've been hitting our head on it for a long time. A close above that level, how significant would that be today?
Well, you still have a fairly sizable short position, according to CFTC statistics as of a week ago yesterday. And, you start to close above these major moving averages, and you're catching more and more of that short position on the wrong side of the market. And that's potential buying that could help things maybe make another leg upward.
And corn is already above its 50-day moving average. It kind of climbed above that level here last week before. But is corn, does it have its own story? Is it moving on its own, or is it a follower at this point? That technical action would tell me maybe it's got its own story.
I think it does have its own story. To me, the story is the outright valuation of corn relative to the cost that there is to produce corn, both in the United States and around the world. And that doesn't matter in the short run, but it does matter in the long run. We're already coming off of a year where farmer incomes are going to be down dramatically because of the fact that we had a bear market through the entire, first 9 months of this crop year. And now we're looking ahead toward what kind of supply are we going to be able to produce next year? And, part of the reason for the bear market is ideas about this year's yield, which are obviously going to be pretty good in some areas. But, we got to plant another crop here this spring. And at current prices, there are not profits for the American producer. And with a year and maybe for some growers 2 years of not very good returns, bankers are going to be a little reluctant to lend against corn production next year. And so, we actually have a tighter balance sheet right now for the 24-25 season than we had in February and March for this previous old crop. Last March, we were looking at a 2.2 billion bushel carryout. We're ending up something around 1.8. We've got a 2.05 billion bushel carryout for this upcoming 24-25 season, given current yield estimates. And yet we're significantly cheaper than we were last spring. So it will have an impact on acres if something doesn't get rectified.
Gotcha. So weeds up a little bit this morning. We've had a couple of down days there with what looked to be maybe some profit taking and these rain chances in the southern plains. So now what are we trading? Where do we go?
Well, we've been trading all along some of the reductions in different crops around the world. The French crop has been in the news. There were more reports here overnight about the French ag minister reducing the size of the exports out of France to probably something between 3 and 4 million tons, which is down from nearly 10 million tons, I think, a year ago. So that's some pretty significant gap that needs to be filled. And of course, the Russian crop, that was upgraded a little bit by a private Russian firm, but it's still down significantly from where it was a year ago. And of course, we're starting off our year in the U.S. A little bit ahead of pace. And, if we can continue to grab a little bit of export business, it portends pretty well for the wheat market.
Gotcha. Cattle market. We had a nice chart breakout yesterday. We're not seeing a ton of follow through here this morning. Is that market just kind of taking a wait and see approach? We've got a cattle on feed report. We did have higher cash last week. So is the market just waiting to see if we can repeat that?
I think what the market might be waiting and seeing today is what the Federal Reserve decides to talk about, and whether or not that rate reduction is a 1/4 point or a 1/2 point. The fact that we've been recently trying to price in a 1/2 point, I think, has been partially responsible for the recent rally in cattle. A 1/2 point cut would certainly be helpful for the American consumer. And if you add that rate cut and lower interest costs to the fact that gasoline prices are quite a bit lower, that's an awful lot more money in the American consumer's pocket. And I think that has the ability to support cattle.
So as far as the Fed decision today, I think everyone knows it's going to be at least a 1/4 point. You said you think the market already has a 1/2 point priced in. So, where do we go from here in terms of what are we watching for from Powell's comments this afternoon?
Yeah. So I believe here an hour ago, we had a 75 to 80% chance of a 1/2 point cut priced into the futures market, with obviously a 20 to 25% chance of a 1/4 point cut. My leaning is that the Fed is going to go a 1/4, not a 1/2, because I think that they don't want to risk being seen as being too political. So what will happen if they only go a 1/4 is they'll be watching very closely for Fed Chairman Powell's comments. And if his comments are sufficiently dovish for future rate cuts or the potential for future rate cuts in the future, I don't think it will be a big deal to the marketplace. But if he sounds a little more hawkish and we only cut rates a 1/4 point, stock market might take a hit. And frankly, that could drag back down the cattle market a little bit too.
Okay. And incidentally, we're already trading back and forth here in the cattle. So like you said, it's going to be one of those choppy days. Hog market, what are you thinking there? It seems like we have this kind of tug of war between growing numbers versus, the funds have been in here buying.
Yeah.
And so what's going on there? Is there some underlying demand that's pushing the market that we don't really realize?
Well, starting with the speculative side of the trade, they were fairly heavily short hogs. They were heavily long cattle. As the cattle market started to give way, some of that spread was unwound, and that unwinding of the hog cattle spread, or the cattle hog spread, I guess, was supportive for hog prices. That's part of the story. We do still think that the numbers are fairly large. They're still running, over a percentage point ahead of a year ago in terms of slaughter, and last year was a fairly large year. So we've got priced in December hogs at $73.50 right now, which seem to be pretty expensive for the kind of numbers that we've been running. And yet you sort of have to wonder if we aren't seeing some demand, or that the demand side of the supply demand equation maybe isn't just a little bit better than we assumed that it might be.
Well, the market's certainly acting that way. All right. Thanks so much, Kent Beadle with Paradigm Futures. Remember, futures and options have substantial risk. This is Markets Now.